I was reading about some of the reports that had come out, and they all just kind of struck me as this pattern I've been noticing all year. Even though the GDP came in kind of low at 1.6%, there is an underlying strength in our economy right now. Hey, it's KP coming to you live from Corona, California. It's about 10:30 West Coast time on a Monday night, and we had our monthly senior management meeting today. Unfortunately, kept me from going and being live in person in Louisville at the MISMO Summit. So hat tip to everyone who made it out there. I will be on the board meeting at 6 a.m. In a couple mornings, but lots going on in our industry, even though conference season has officially winded down. It's jobs week. Friday is a tier 1 data point, the May jobs report, even though they can't collect data through like yesterday and get it out by Friday. So it's typically data, the first half of May and the second half of April. But, we're in a no hire, no fire economy. So, we're not in a job loss recession, which is where you see things get very interesting. And there's still, at some point going to be a recession, but it's not on the horizon. And I'll get into the underlying strength of our economy and why you don't hear much about it when you read the news. All you hear about is inflation and Iran and oil. But I'll get into something that I've been talking about, and it kind of ties into the flow of money. And I'm going to get this out right now. I am not a financial advisor. I am not responsible for your losses, only your profits. But Jobs Week has a whole calendar of stuff. Tomorrow morning, when you're probably waking up and watching this video, the job opening and labor turnover report will come out. That's always a good one. And, there's, other data points out there. Challenger job cuts is huge, ADP report, all good stuff. But before I get into Jobs Week, or maybe I'll just wait till Thursday to talk about that. There was a report that came out today, and it was the ISM Manufacturing. Now, that's an important report because, it's a data point, right? And so I was looking at my Mortgage News Daily app, which is fantastic. I love it. And I was reading about some of the reports that had come out, and they all just kind of struck me as this pattern I've been noticing all year. Even though the GDP came in kind of low at 1.6%, there is an underlying strength in our economy right now. So construction spending was up for April, 0.4% versus 0.2 was the forecast. Now, the previous month was 0.6. ISM Manufacturing employment was up 48.6. So it's under 50, still means it's contractionary, but the forecast was for 46.4. And the ISM Manufacturing, the PMI for May was 54. Over 50 is growth. It's kind of like 2% GDP is like even keel, over it is expansion, an expansionary economy, and below 2% is contraction. And it used to be if you're under 2% for 2 quarters in a row, you're in a recession. But there's this whole other definition of it. But I'll get into who is in a recession, some other foreign countries, and it's very interesting. And I'll tie it into Wemby and PSG for those sports fans out there. And then ISM Manufacturing prices paid was at 82.1 versus 85 forecast. So not as high as feared on the prices paid for manufacturing. And the previous report was 84. So it was actually down. And so I just kept thinking, there's all this underlying strength in certain things that we see out there. We know, the economy is trying to grow out of our federal debt and deficit. And earnings have been insanely high. I talk about stocks on here a long time. And the reason I do is because the flow of money is interconnected. Let's just kind of, take it, stocks and bonds, right? Money flows, to either stocks or bonds. We know it's not a binary choice, but there are times when the market will show that that's the case. There's a lot of money going to stocks because companies are growing and they're crushing it on earnings. Now, maybe not our companies, maybe it's not as busy as we want it to be, but all we talk about is AI, and all the hyperscalers and all the AI companies and all the semiconductor companies, they're all making tons of money. And what does it have to do with the price of tea in China? Or rates. You know, you hear about the 10-year Treasury yield, which, by the way, has come down 25 basis points literally in like 2 weeks. Nice improvement. But it did get as high as like an intraday high. Let's call it 468. And all you hear is like oil and Iran and the Strait and inflation and inflation. But there's another reason why Treasury yields go up, because if the yield in the stock market is absolutely incredible, like all-time highs, unbelievable, people making money, literally printing money hand over fist, and trees don't grow to the sky, so that's gonna come down at some point. There's normal corrections. It's normal for markets. But if you're going to invest in bonds instead of stocks, you demand a higher yield, especially if, there is inflation or there's a high debt to GDP or whatever. And so, and lo and behold, I've been kind of thinking this for months on end. And then, there's this great data. I talk about Mizuho, and they said, one of the things that people aren't talking about as it relates to higher yields is that U.S. real growth trajectory, is good. I mean, the underlying economy is strong. Now, we know that there are people with credit card debts, and there's FHA delinquencies and foreclosures. And, if you, again, people read 5 to 1 things that are negative, it tracks things. But if you zoom back out, there's how you feel about things. And then there's like, well, how are you actually doing? And most people in this country, something like 70% of this country is like, things are fine. Like when you look at like your income and your job and your debt. And by the way, if you're a homeowner, which is like 63% of America, you've got generally pretty great nested equity. If you have even a smidge of money in the market, which I've been telling you for like 8-9 years on the saying, like just invest in stock, you might have a little wealth effect, feeling it when the stock market's doing well. Doesn't always do well. Last April, this past March, and in April for a period of time. So, there are times, it can be volatile, and it's not for the faint of heart. But, one reason, I'm not saying it's the only reason that yields are high, is because there is underlying strength in the economy, and companies are generally doing well. And overall for the year, GDP is expected to grow. So just the next time you read that, like, the only reason that the 10-year Treasury is going to go to 5 and rates are going to be at 8% is because of oil and Iran, just remember there are a lot of factors. And that's why we talk on this podcast about the flow of money. And I don't have it all figured out. I'm not saying I do. But anyway, if you stuck with me this long, I want to give you my candid recap of FICO World. First of all, it was a pleasure to be invited to their executive, advisory board and roundtable, and it's a 2-year stint. And I walked away super impressed with the company of FICO. And so, me, if you see me at a trade show, I'm talking to whoever is around me and what's going on. I'm talking to people who are like, quants and, wonks, and they dig into the data and they want to know like the scoring models and how all that stuff works. And that's all great. And then I talk to other business operators in other areas, people who buy and sell packages of loans, maybe not necessarily mortgage loans, car loans, PLS, ABS, commercial MBS. And I walked away getting the feeling that the FICO 10T, that's the one that we're not allowed to use yet. So apparently with the FHFA, who governs Fannie and Freddie, at least in that realm, we're on classic FICO at some point. I don't know when. Vantage 4.0 is going to roll out. And then after that, then FICO 10T will roll out. And I'm talking to all these people, these, hotel lobbies and bars, and there's like almost 3,000 people at FICO World. And they're all like, the FICO 10T model is the best model out there for risk assessment. And, I'm like, why is that? And they just talk about, the company of FICO itself. And so, look, just because I got invited on their board, I'm not like, all right, now I'm pumping the Kool-Aid. I'm digging, right? And so, what was interesting to me was to hear other people in other lines of business talk about the quality of the data. Now, of course, in those meetings that we had, we talked about pricing. We talked about the value of what we get for a credit score. And of course, the VantageScore came up, which is being tested by some lenders. We're not one of them because there's really nothing to test My PP&E, product pricing engine, isn't programmed. The MI companies don't know how to price it. There's no loan level pricing adjustment. HUD said they're not doing anything yet. I mean, like, what can I do? And so, we're a medium to large size lender. I used to call us medium, but I'll kind of admit that we're a little bit larger than medium. I mean, hell, we just, reapproved our AI governance policy today, and we went over all of our, contracts. I mean, we do act like a real company, even though, the size of us is, probably not going to make any headlines, but we feel pretty good about what we do here as a multi-channel lender. But what was interesting is, one of the things that came up in, this whole credit scoring model thing. I mean, obviously price is a big thing, that everyone wants to worry about. We do too. We all spend millions of dollars on credit reports. But the quality of the credit, it has to make sense, and there has to be some guardrails around it. We just here personally don't want to stick our neck out and do something first. Now, what's funny is, I came up as an account executive, and I've also originated loans. And so, I peruse around the chat boards on Facebook, and the joke of originators is like, your Credit Karma score. I hate when borrowers tell me their Credit Karma score. It's like been like an underlying, it's like, I was like, what's the best CRM? It's like this, it's like the one you use, Anyway, what was funny is, so Intuit, which owns like QuickBooks, they also own Credit Karma. And the data that they get for that Credit Karma score is from Vantage. And I was just like putting two together. I'm talking to people about what the best model is. We have decades of history of using, FICO, and obviously the industry is going to try and test out Vantage. And then I found out in this meeting that Credit Karma, which is literally a joke amongst originals, it's literally a joke, is based on Vantage data. And so, I love, watching all these larger lenders go do this pilot, for Vantage, because they're going to figure it out whether it's going to work or not. And obviously there's a mandate from FHFA, and so the cards are on the table. And so, FICO, I think they're not done with coming out with, pricing for the industry. But I walked away super impressed with the company, and now I'm just going to put my head back down and continue to work. Thank you to the MBA for obviously putting on the MISMO Summit, but also we had our call this morning, and having that House version of the Road Act get revised to be a little bit more like the Senate version that's passed. There's like this, the build to rent, the House revised the build to rent 7-year FHA multifamily verbiage and language. And so they're getting closer. So I think that's going to pass. Both parties are highly motivated to pass something before the midterm, just like this administration is highly motivated to open the Strait of Hormuz. And maybe our oil prices will come down and we'll catch a breather. Okay, so Friday's data showed that Canada is officially entering a technical recession following a 0.1% annualized contraction in Q1, echoing the GDP contraction seen in France. And it made me think, Wemby's French. He's going to the finals. They beat the freaking Thunder. PSG, Paris Saint-Germain, won their second year in a row, the Champions League. That was a big deal. I actually watched that, including the shootout. And then my son went to his second shootout in his little third, fourth grade game. Shout out to Luca. Made a penalty kick on Saturday to get out of the semis, and then scored the only goal in a 1-1 tie. Had a great team, and his team was awesome all around. Their goalie, Paul, was good. And then Luca made his PK shot in that, and they took home the 25th annual Pilot Cup. For those in Orange County know about the Pilot, the Newport Mesa Unified School District, all the elementary schools square off, 3rd and 4th grade, 5th and 6th grade. Anyway, fun full day. So yeah, I was thinking Wemby and PSG, maybe they should be in charge of France and Canada's decisions. They seem to be winners. By the way, energy is a big thing. I'm going to end with this. Energy. So get this, Tahoe area is served by a small power company called Liberty Utilities. Liberty gets its power from Nevada Energy. It's a Berkshire Hathaway company, which, by the way, they're in the news. Shout out to them for buying a builder. I think it's accretive to all their other businesses. Very interesting to see Greg Abel. I am a longtime Berkshire Hathaway stockholder, the B shares, not the A shares, bro. So NV Energy is a subsidiary serving most of Nevada. NV Energy just gave notice that it will cease furnishing power to Liberty Utilities after May of 27, so next year. The power currently going to Tahoe will be directed to data centers. So there's a little bit of backlash for data centers. Obviously, if all of our electricity bills are going up, I'm telling you, I'm taking a hard look at solar. I want the sun to power my house, and I don't want to pay for it. So I'm trying to figure that out. Anyway, we'll get back on Thursday. There'll be a lot of data. Have a good week. Cheers. Hey, it's KP coming to you live from Corona, California. Who wants to be a trillionaire? It might actually happen next Friday with the SpaceX IPO. I'll get into that in a little bit and talk about some data that I got on the robotaxis and Waymo. Anyway, back to the mortgage business. Probably kind of feels like we're in a little bit of a holding pattern, right? The rates are, steady. They aren't shooting up. They aren't coming down. 10-year Treasury is at, right around 448. Has not really gone back above that 452 mark, not really below the 445. And man, you would think if you were reading the news, we should have 10% mortgage interest rates and things are going crazy. But the reality is, the market's just kind of waiting to react. And what will be interesting about the jobs report tomorrow, this is a big tier 1 data point. If it is a strong number, that is a sign of underlying strength in the economy. And if you remember on my video a couple days ago, rates don't only go up because of oil and inflation, right? And so, much like the tariffs and the fear of the tariff inflation, it was smoothed out over time. Yeah, prices are going up, but wages have been going up. They're not going up as much anymore. And so that will be something that may break at some point in the coming months. But this is a market-moving data point in the morning, so we'll keep an eye on it. I don't have time to get out a Friday video, plus, it's just hectic. Going to try and do a family vacation, take my 4 little ones to Park City for a week. So I can't unplug. I've got lots of stuff going on and obligations, but summer started for us, so praying for all you out there that have kids. I know it's no chill for like 3 months. But yeah, watching the labor data this week, ADP was good. Job openings on the JOLTS report was good. Now, of course, everything always gets corrected when the quarterly census, of employment and wages comes out, the QCEW, which the market doesn't really react to that much, but it is kind of the reckoning from the states. And so that's coming up here, I believe September, might be another reading. I'll have to check out when that is, and I'll do a little more research for you. Remember, that's when the states report back to the Bureau of Labor Statistics, which is the entity doing the jobs report in the morning, the big tier 1 data point. And they said, yeah, you've been making up this birth debt ratio, and you've been saying all these businesses are opening, and you've got all these modeling, and your surveys don't have good responses, and it looks like it's strong. But what employers, when they report back to our state and say this is who's actually employed and what we're paying for FICO, food, and all the insurance and all the stuff, this is what the actual number is of people employed, at least on this number. So it's been lower. It'll be interesting to see if that trend changes. I doubt that it will. So anyway, jobs week's almost over. Kind of ho-hum. It's still spring purchase season. When the borrower psychology, when rates kind of stay in a range for a while, they don't shoot up or don't come down, people are like, all right, well, if I'm qualified, what am I waiting for, right? And I'm noticing some, house listings have turned negative year over year. And I think I read something like last month was the most, 5% of listings were taken off the market. So maybe that's the people who are, unrealistic, trying to put out high numbers and try and catch a bid. And, I'm kind of guilty of that myself. You guys know I've done some videos in the past of home flips. We have one in Culver City that's listed right now. We are just about to do a price cut. We tried to get a number that was, probably top of the market, and it's a beautiful property. It's for high-end borrowers, but, this little kind of steady-as-she-goes housing market, I'm feeling it too. So we're having to do a price cut to try and move that product, free up some cash, and move on to the next 3 products or projects. Anyway, little insight there, just sharing some stuff with you. I'm in this too. The flow of money continues. We'll keep an eye on rates. Speaking of homes, the median sales price of newly built homes is now at its lowest level since 2021, according to the latest data from the census. So on top of that, builders are still rolling out incentives to bring buyers through the door. And electricity, kind of a problem, right? 42 of 50 states saw electricity prices go up from March of 25 to March of 26. So mixed bag of data. Overall, business is still up year over year because we had a nice bump in Q1, and so we just keep grinding, right? Non-QM is a great way to get creative and help other borrowers. I always notice like when the refis pick up, non-QM business kind of is set to the side, and then when refinance business kind of comes back down, people go back to the well and start to get creative. And non-QM is a great product. I think if you just focus on it all the time, you'll just be consistently producing at a high level. The loan amounts are huge. Equity lending is still great. I think 40% of all housing stock in America is owned free and clear. So let's go get it. There's some great products out there. We're rolling out a new equity product here pretty soon. So pretty excited about that. Okay, let's talk about the stock market. I am not a financial advisor. I am not responsible for your losses, only your profits. SpaceX next week is going to come out with a $135 share price. So it's being valued at $1.7 trillion, and only about 75 billion of it is being offered, right? So, again, this goes back to like, I hear people talk, especially about even lenders in our business. Oh, well, they're public or they're public. Well, they're not all public, right? So if a portion of the float is public, that means the whole thing is public. So Elon is obviously a majority shareholder as an individual. On paper, at $135 a share, if the market absorbs it, and I think it will because it's wildly popular. All my stock subscriptions that I've been paying all this ungodly amount of money to over the years, they're going crazy the last 3 months. Like, get in the IPO, get in the IPO. I actually tried to get in the IPO in a couple of my accounts, and I can't do it. So anybody got some allotment, they want to throw a couple shekels my way, I'm game. Just message me in LinkedIn. Dead serious. Or else I'll just be like every other schlep, just on my fast finger at market open next Friday morning, trying not to get absolutely clipped. It's very dangerous playing the IPO game. On paper, at $135 a share for, just drop something here. It will make Elon Musk a trillionaire. A trillionaire, which is insane as an individual. I will say, I know he's an imperfect and flawed human being like we all are, and for those of us of the faith, we learn to deal with our flaws and be humbled every day. If he's a trillionaire, I think he's probably pretty humble for a trillionaire, but maybe not. I don't know. We'll see. He's the kind of guy who'd be like, hey, everyone in America, here's 10 grand. He would do something like that. I don't know how far that would go, but that's insane. $1 trillion. Okay, so his other business, Tesla, which obviously you guys know, I'm a huge fan of electric vehicles, and especially with electricity prices rising and gas prices rising, it's kind of nice to get a few efficient vehicles. There's talk that Tesla would be at some point merged into SpaceX. So with all the money in the coffers that they have, that they would merge them together. There's some creative stuff going on there. All the radar technology for all the full self-driving. This month I will have my EV for 7 years from Tesla. All the camera data, they've been using cameras, and it's like eyeballs on the world. And then take that data set, the 4D chess move, put it in the Optimus robot. Launch rockets to the moon, launch them to Mars, launch them wherever. You have robots out there trying to colonize and set things up in case humans ever go there later. If we don't blow up this friggin' Earth first by some BS going on in the Middle East or Taiwan. I am worried about a Taiwan takeover by China. I think it would cut the stock market in half immediately. That's the black swan event that I'm most fearful of. And you want to talk about the wealth effect going away. That's a scary one. This Iran conflict, it's going to come to an end. I don't know how, but, this administration is exercising patience. I thought for sure, like 45 days ago, they just would bomb the hell out of them and be over. But I don't think that's the right path, and they're giving peace a chance. And 80 oil tankers have gone through. I read this whole article that there are tankers that are going through, like they turn off their monitoring and their radar. Some have been escorted by the U.S. Some are paying tolls in Bitcoin or yuan. Bitcoin is down. They're about cut in half right now. Might be a good time to buy. Again, not a financial advisor. Could be a crypto winner. Could be even longer. But I think towards the end of the year when we start to see things kind of get through the midterm uncertainty, get through the Iranian uncertainty, get through some of this housing data, inflation uncertainty, labor uncertainty throughout the year, a little more time for this new Fed chair. There's uncertainty on how they're going to operate, right? Like I just read today that there's 2 advisors that came from like Project 2025 to be on their board. And they basically want to say it's no longer a dual mandate. They just want to look at inflation because the Fed can't really do anything about labor. Although I kind of disagree, but it'd be interesting to see how that all plays out. It's going to take time for a consensus on the board to be done with anything. It's never been more divided. And politically, with midterms coming up and all these primaries that happen, I feel like, if you're into politics, which I'm not, which is fantastic for my mindset, I feel like a lot of this, people that are into politics are divided. But you know what? This too shall pass. And how long will this too shall pass take? Probably till the end of the year when we get to Thanksgiving and Christmas. Anyway, last little set of data here. Tesla's authorized robotaxi fleet in Texas is less than 1/10 the size of Waymo. Tesla has 42 authorized robotaxis in the state. Waymo has 577. And there are a couple. Avride has 317, Neuro has 47, and Amazon Zoox has 35. So I thought that was an interesting little tidbit. Have a wonderful week. I got 2 videos coming to you from Park City next week, and I'm sure my little monkeys will be running around. Have a great one. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.